Tesla, my Tesla. Boy, do we have a lot to get into in this video here today, folks. Three main things I want to cover. Tesla earnings, the numbers, my opinion on those numbers, the conference call. Elon dropped several bombshells in that conference call on several different subjects. Got to speak about that. Got to tell you what's going on there and my opinions and perspectives on that. And then also going to share my prediction on what's going to happen with the stock price over the next few months, because I know it's definitely on a lot of folks' minds, like what's going on with Tesla stock. It was down almost 5% in the trading day here today. It's down almost 5% after hours, right? We'll see where things shake out tomorrow. But yeah, I'll share my perspective. So a lot to get through in today's video. I appreciate everybody joining me. As always, thank you for being subscribed, folks. We're going to get through the good, the bad, and the ugly in this video here today. And we got a whole bunch of all three of those, and definitely some ugly. And by the way, thank you everybody that joined me on Twitch. That live stream was insane. It was almost 4 hours long. It was absolutely incredible. Holy smokers, that was no flipping flapjack and jokers. So thank you everybody that joined me on that. And man, yeah, we're going to do a Palantir one later on when Palantir reports, and Meta and Apple and a lot of other big ones come this earnings season. Alrighty guys, so right off the bat, if you want me to just tell you how it is, it's bad. There's no other way of putting it. It's very bad at Tesla here in the short term. And I don't mean like a little bad. I mean it's really, really bad at Tesla here in the short term, okay? Total automotive revenues were up 5% in the quarter. If this is almost any other automaker, 5% is just fine. Like, okay, for Tesla, that's a disaster, okay? When your automotive revenues are up 5%, that's brutally bad, okay? Energy generation and storage revenue is up 40%. That's one of the few bright spots. In services and other revenue is up 32%. So those are two of the only bright spots with the whole company right now in the short term. The bad thing is, though, those businesses are very, very small, right? I mean, you look at automotive revenues, over $21 billion in automotive revenues the previous quarter, $19.6 billion in automotive revenues this most recent quarter, the Q3, as versus $1.5 billion in energy generation revenue, right, and storage, and $2.1 billion in services and other revenue. So obviously, the automotive business so dwarfs all the other numbers that they aren't that meaningful right now, okay? Now, we don't have a lot of bright things to go through in this video, so let me just extrapolate on how big this is for the company, okay? And why this matters so significantly. What you're seeing happen right in front of you right now, folks, is something that you're going to see happen for Tesla for years to go in the future. And what I mean by that is you're going to see this services revenue continue to skyrocket up in a much faster way than what you'll see automotive revenues likely increase for years to go in the future, okay? Very similar to, Apple. Obviously, they built their massive iPhone business, and that was just a huge component, right? But over time, the services business became bigger, more substantial for the company. And so we're going to see the same exact phenomenon play out for Tesla over this next 5 to 10 years. So you might look at the numbers now and it's like services and other revenue looks so small. Just wait to see where it is in 5 or 10 years from now. It's going to dwarf pretty much anything else they got going on outside of maybe automotive revenues, okay? And there could be a day when those two are actually neck and neck, right? Now, total revenues are only at 9% for the company. For Tesla, that's horrible. Any other company, that's pretty good, but for Tesla, 9% revenues up is awful. Total gross profit for the company was down 22%. Total GAAP, generally accepted accounting principles, gross margin was down 719 basis points. That's just a fancy way of saying basically 7.19%, okay, percentage points. That's a huge drop. Their gross margins are getting obliterated right now. Operating expenses were up 41%. So yeah, I mean, if your margins are, plummeting, your revenues are having trouble growing, and your operating expenses are climbing 42%. This is not going to be a good situation, okay? And that's why their income from operations was down 52% year over year. It literally got cut over half, okay? Operating margin came in down almost 1,000 freaking basis points. That's incredible, right? Operating margin came in at 7.6%. In this same quarter last year, we are 17.2%, which shows how much, Tesla's business model is really just failing on the financial front in the short term here, right? Adjusted EBITDA was down 24%. Adjusted EBITDA margin was down 706 basis points. Net income was down 44%. EPS on a GAAP basis attributable to shareholders was down 44%, okay? Yeah, that's one of the worst income statements you'll probably see this entire earnings season, just to be quite honest. That's a complete disaster right there, folks, okay? Now, they missed basically everything analysts were expecting. They missed everything. Okay, they missed margins, they missed revenues, they missed earnings per share. All the analysts were wrong. Everybody was wrong except me. I was right about that, right? I called this. I told you guys 3 days ago. I made a whole 37-minute elaborate video on this. I told you they're going to miss margins, they're going to miss earnings per share, they're going to miss revenue. And I also told you about my fear that revenues could go potentially negative for the company, right? And obviously, I decided to hedge a little bit. Given that I have $400,000 in the stock going into these earnings, I was extremely concerned that analysts were too high with their EPS, their revenue, and their margin expectations. And based upon everything I understand with the company, I thought they were going to miss all three. With Tesla, I tried to just be as grounded as possible with the stock. I've been in it for years, right? I used to own dramatically more shares than I own today. And I've been fortunate to watch this company since they went IPO. I've been fortunate to own it for so many years and know so many people that work at Tesla and be able to get different thoughts and whatnot from a lot of Tesla bulls. I mean, there's probably, there's probably at least 50 people in the private stock group that either work at Tesla or have worked at Tesla or have strong connections there. So I just understand the company, I think, on a higher level than a lot of folks probably do. And so I've been able to just predict this stock year after year after year for really like the past 5 or 6 years and kind of what's going on with the business model. And it's not good right now, right? If we go ahead and take a peek at, in my opinion, some positives that are negatives really in the short term, you would look at Tesla locations up substantially, mobile service fleet up substantially, supercharger network as far as stations up substantially, and connectors. Those all were up dramatically. Now that's a cost to the business, but that's great long term, right? We, at the end of the day, if you're gonna have a bunch more Teslas on the road, we need more superchargers, we need more locations, we need more, service fleet, we need all of that stuff. Okay, now I got something good for you guys. Okay, here's some good news. This is good news. Okay, this is services and other gross profit. This is something Tesla throws in their presentation that I think just kind of gets washed away, and I don't even think a lot of people look at this. It's a little teeny slide. I blew it up for you guys big here, but I think a lot of people don't even look at this, okay? Look at the numbers here, okay? Services and other gross profit. This used to be a massive drag on the company just a few years ago, right? And obviously they flipped that over the last several quarters. Now, long term, this is going to be huge cash cow for the business. So services and other, this is going to be huge cash cow for the business, okay? I'm telling you, right now, a lot of people just bypass over this. They don't even look at this particular thing I'm showing you right here. Believe me, 5 years from now, every single person will be looking at this, and this will be one of the most important things you'll possibly look at when you're judging Tesla, how the company's doing overall, is this right here, what I'm showing you right there. Tesla showed a few pictures off, which I thought were cool and exciting. They showed some Cybertrucks on a Tesla Semi here, which is very, very exciting. They also showed the 1 millionth Model Y being produced out of the gigafactory in Shanghai, right? I have a friend actually that's in China, and he sent me this photo last night. And he said these babies are, guess how much? $20,000 in China. And from my understanding, if you buy an EV, you don't even have to pay tax on that, from my understanding. And so, this is what Tesla's having to deal with in China. They're having to deal with a lot of these very cheap models. The good news is in China, Tesla definitely has brand prestige and is definitely seen as a very premium brand. So you get some, I guess you can say benefit from that. But on the price front, they are facing a lot of serious competition, and that competition is not going away in China. That's going to remain there for years to go in the future. And so just keep in mind that's going to, I would say somewhat limit Tesla's true opportunity in China over time, because China's just not going to be able to beat these guys on price. They're just not. They could beat them on brand, certainly, but they will not. They could beat them on technology. They could beat them on autonomous driving capabilities, but they will not beat them on price when it comes to EVs, okay? And so it is something to keep in mind. These guys are going to, destroy Tesla in terms of pricing-wise, okay? Now, this matters substantially, and this is one of the main worries around Tesla right now, what I'm showing you right in front of your face right there, okay? We just had on a quarter-over-quarter basis vehicle deliveries drop. Now, that's even after all the price cuts Tesla did and all the tax credits we have going on right now. And still, vehicle deliveries actually dropped, on a quarter-over-quarter basis. That's not something you want to see right now, right? And I'm not sure that's done necessarily going down. It could get worse before it gets better in terms of vehicle deliveries. So that's just something to kind of keep in mind there. And definitely I thought it was a worrisome slide. Now, here's another even maybe bigger problem here in the short term, right? Net income for the company was actually down on a year-over-year basis. Now, keep in mind, the volumes for Tesla are up substantially. They're selling way more vehicles in this quarter than they were in the previous year's quarter, but yet their net income dropped, right? That's what happens when your margins drop substantially and you consistently, obviously, decrease the price of your vehicles more and more and more, right? So we are with a company that is net income trending down and down and down. The good news is, Tesla's still making very good money. The bad news is, it's never fun to be making more product for less money, because that's essentially what's going on with Tesla right now, right? Now, this chart I'm showing you right here in front of you, there's only one of two ways you can look at this, okay? One is Tesla's broken. They have a broken business model. Or two, they're pulling a genius move right now. There is no in-between, folks, for this chart I'm showing you right now, okay? This is Tesla's operating margins, all right? Now, Tesla's operating margins have obviously fallen off a cliff here recently, right, as in the past few quarters. Now, meanwhile, the auto industry in general is keeping their margins very, very steady, very steady. And a lot of those guys have offset any pricing pressure with just going up in price of their vehicles, right? So, this is a broken business model or a genius move. What do I think it is? I believe it's a genius move. I believe absolutely this is a genius move on Tesla for the long term and Elon and the team, okay? Because what I see with Tesla is they are now going to brand themselves in the United States of America and in Europe as well as the vehicle for the masses, especially when it comes to Model 3 and Model Y. It's the vehicle for the masses. And I believe, if you go back to 2022 and before, Tesla was seen as like a premium brand. Oh, it's so expensive. I can't afford a Tesla. There was a thought process to starting this year, and especially in 2024, Tesla's going to be known as, oh, this is an affordable vehicle. If I want to, if I am in the middle class and I need to go get a new vehicle, the right financial decision for me to make is go buy a Tesla. And that's a huge switch, right? And this is just something that I think is going to bury a lot of these traditional automakers in the grave, is a lot of these traditional automakers are deciding to take price right now, and they're selling inferior products versus the Model 3 and the Model Y at higher prices so they can collect margin in the short term and profitability in the short term, and Tesla's going to win this war over the long term. And when it comes to services and when it comes to total amount of vehicles on the market and market share, Tesla's going to continue to eat market share for years to go in the future. And so I just think what you're seeing in front of you right now is very bad short term for Tesla, but is so positive for the next. If you're telling me, is this positive or negative for the next 6 months for Tesla? What you're seeing in front of you is very negative for Tesla. If you ask me, is this positive or negative for Tesla for the next 6 years? Very positive for the next 6 years of Tesla, what you're seeing in front of you right there, okay? Now, next up here, this is so freaking important, folks. This is so important, this slide in front of you right now. This is Tesla's balance sheet, okay? The balance sheet is shocking. The company now is sitting, as of last quarter, with over $26 million of cash in investments on the balance sheet, okay? The total liabilities of the company, the total liabilities for Tesla is sitting at about $39 billion and some change. So there's only a $13 billion discrepancy between what Tesla has in cash and investments versus total liabilities. That's one of the most insane numbers of any company, of any public company, never mind an automaker. The other automakers are absolutely loaded, and I mean loaded up with debt. I mean short-term debt, long-term debt. Whoo, it's an ugly situation. And there you got Tesla with one of the most pristine balance sheets. This is a tech-like balance sheet, okay? A lot of people like to compare Tesla to just basically being a tech company. This is a tech-like balance sheet in terms of how clean that balance sheet is, how cash loaded it is, how low liabilities it is compared to, basically their assets, and certainly even compared to their cash and investments. Phenomenal, okay? So, in regards to the numbers, okay, and then we're going to get into some bombshells Elon Musk made on that conference call that I thought were huge, and then we'll get into my price prediction where I think the stock price is going and all those sorts of things, okay? To finish out my thoughts on the raw numbers, okay, very bad short term. I mean, extremely bad short term, okay? Extremely bad short term. Horrible, awful, any word choice you want to possibly use them all, okay? Disaster, horrible. But everything I just went through there is going to end up being a long-term huge benefit for Tesla. It might be hard to see now over this next few quarters, but believe me, in a few years from now, people will be able to see the grand vision and then be like, oh, I see what they were up to there. And yeah, they were hammering their margins during that time period while they were just gobbling up market share. Seemed like a bad move. I always tell you guys, what is the stock that I always tell you Tesla is always reminding me of? There's one stock in the stock market. Amazon. Amazon. Such a different business model from Amazon, but the way Elon's approaching this game is very similar to how Jeff Bezos built obviously the massive giant that is Amazon between their e-commerce business and AWS. And I see the exact same thing going on with Tesla. And so, and Amazon's gone through certainly some really bad short-term periods when they were in their major growth stages. And that's exactly what Tesla's going through right now. Very bad short-term, but they're setting everything up for a beautiful, beautiful long-term, okay? Now, Elon dropped bombshell after bombshell after bombshell on that conference call, okay? So, first thing I thought was huge. He was asked about the Mexico gigafactory, okay? He says, still excited about a Mexico gigafactory. That will be coming at some point in time, but he's not sure when. And he is scared of what happened in 2009 into the automakers. And basically, Mexico gigafactory is up in the air, okay? He wants to do it. He made that clear, but there's no timetable really on when this is going to happen, how fast it will move from the time they, start digging, let's call it, from the start and they start construction of the gigafactory to the time it gets finished. There's really no timetable he's putting out there. He talked in depth about the 2008-2009 great financial crisis, how Tesla barely was able to make it through. He talked about the tough years of 2017 through 2019 of Tesla having to go through. He spoke about all that into detail. He spoke about the automakers that went bankrupt in the great financial crisis, and he's very scared of being too aggressive in this time period of higher interest rates. He said, if he knows when they're going to lower interest rates, he can tell you when he's going to, go full throttle with kind of Mexico Gigafactory and all those sorts of things. So, yeah, Mexico Gigafactory, it's going to eventually get done, but it's up in the air right now. Timetable, very uncertain. Elon's extremely uncertain about the state of the economy, what's going to transpire over this next year, and he's what I would call playing it safe, okay? Now, next up. What did I tell you guys in the video I produced for you recently, that 37-minute video? I told you guys there's problems with Cybertruck. A lot of people didn't want to listen to me. I told you there's problems with Cybertruck and the production and what's going on there. It's clear as day to me. As somebody that's followed this company for the last 10 plus years and owned the stock for the last 5-6 years, I know when things are wrong behind the scenes. Sure enough, Elon tempered all expectations around Cybertruck. He says this is super hard. It's super difficult. Obviously, when everybody got too excited about how fast Model Y ramped and ramped profitably. You think you got to understand is Model Y was so freaking similar to Model 3. Cybertruck's completely different. Completely different from anything Tesla's ever done before. And so Elon Musk says this is super hard stuff and just tempered all expectations, okay? He said, they asked him, when are you going to hit 250,000 units? He said, maybe at some point in 2025. He's very uncertain. But the bottom line is, don't expect crazy amount of Cybertruck units anytime soon, folks. Anytime soon. And that I thought was a very, very big statement because, obviously we all are very excited about Cybertruck coming to market, the next big vehicle for Tesla, and what numbers that can put up over time and how many pre-orders it has, and the most talked about vehicle in the history of mankind. Like there's never been something like Cybertruck, right? Where it got that much social media attention, that much debate, and still to this day. But don't get too excited about the numbers over this next year or so, okay? Now, also, something scary was basically they kind of led on that Cybertruck could actually hurt margins for quite a while, right? So if you were thinking like maybe Cybertruck can actually start being margin accretive and starting to help out margins, let's say, 2Q, 3Q of 2024. It doesn't sound like it, just to be honest, from what I heard in the conference call. It sounds like this ramp is going to be brutal. It's going to be extremely costly. It's going to hurt margins. From everything I read through the tea tree leaves, as they say, it sounds like it's going to be tough, very, very tough in 2024 for Tesla, and it could weigh on profitability in a massive way and weigh on margins as well. And so this is just another reason why don't expect necessarily margins to have troughed yet for Tesla. Okay, it is very possible that it could get worse before it gets better. Okay, which gets into margins, right? And I was listening on that call for something that would give us hope around margin recovery, or like not margin recovery, but at least like troughing. Like, oh, okay, this is the trough from margins. It's going to get better from here, okay? And I can tell you guys, I heard absolutely nothing on that conference call that gave me confidence that margins have troughed here. It's only going to get better. Nothing, okay? Margins are going to continue to struggle. Margins are going to continue to be in a struggling place. They could get worse before they get better, okay? So, yeah, that was something I was like, oh man, because I can tell you it would have been seen as a very bullish thing. If Elon and the team could have went out there and said, this is a trough for margins, it's only going to get better from here, I think the stock could have been up after hours very nicely. I think we could have been, back up to 250 or so. But given that there was nothing they let on about margins improving, that's what I was like, ugh, okay. Now, Elon also got asked about full self-driving, right? FSD. Why lower price on that? It's supposed to be, more valuable than it's ever been, right? The technology is more, better than it's ever been. Why lower price on FSD? And Elon brought it back to essentially like people need to be able to afford it, right? And so if you're charging, $15,000, $30,000 for FSD, who's going to be able to afford that? It's just crazy. It's like buying a whole other car. It's just, if you keep adding up the price and price and price. And so there's been a lot of Tesla bulls over time that have been very delusional in regards to this. FSD is going to be able to, $25,000 is going to be able to charge for that. $35,000, $45,000. No, it doesn't, not the way it works. I've always been the approach of I think FSD long term is going to be coming down in price. Not because the technology is bad. I think it's going to be the creme de la creme. But the cost is going to come down over time. They're going to charge cheaper and cheaper prices. And everybody that, in my opinion, has been buying FSD for the last few years, you've been getting finessed. That's just my personal opinion, okay? They're going to bring down the price more and more and more over time. You know why? Because the masses are going to need to be able to afford it. I personally think, and I told you guys this, I believe $99 a month is eventually going to come for Tesla. Because I believe that is a price point that the masses will sign up for. If we're talking $99 a month, I can see huge amounts of people. Personally, I don't even have FSD on my vehicles, right? I'm not going to pay that sort of money for the FSD. It's not worth it to me. If Tesla gave me an option today, $99 a month for FSD, I'm getting it on both my cars like that. I would absolutely do it, okay? That's where Tesla's got to get to with the value proposition, where people say, oh, you know what? This technology will bring me $99 a month. It's a big difference between paying $10,000, $12,000, $15,000 for something and being able to pay $99. People just don't, most people don't have, and remember, Tesla's now going after the masses. As they scale to 5 million vehicles a year, 10 million vehicles a year, you're going after the masses. The masses don't have $10,000, $15,000, $20,000 of just extra money laying around to go ahead and buy FSD. It's unrealistic. It doesn't work, okay? $99 a month, the masses have that. The masses can do $99 a month and say, you know what, I'm going to go ahead and do this FSD for $99 a month. I'll go ahead and do this, okay? It's not the old days where it's only rich people buying Teslas anymore. Now Tesla's going after the masses. It's a whole different playbook, right? Whole different playbook. And it's like saying, the iPhone sells for $1,000, right? $999. I can tell you the iPhone brings way more value to everybody's life that uses one of those, or a smartphone in general, than $1,000, right? I would be willing to pay $10,000 for an iPhone, or it probably brings me $100,000 of value, right? Same thing with my MacBook Pro. But guess what? The masses aren't paying $10,000 for an iPhone, nor are they paying $99,000 for an iPhone. So just because something technically can bring you that much value, it does not mean it's going to command that sort of price, because if you need to sell millions and millions of something, you need the masses. And the masses can't afford ridiculous prices. It's got to be affordable. $999 for an iPhone? Hey, there's a lot of people out there that can afford that. $9,999? Not very many people can afford that. Apple would still sell iPhones for $10,000. If Apple went up tomorrow on their iPhone price to $10,000, they would still sell iPhones. And their business would be a disaster very quickly, because they would be able to sell a very small amount and people would be switching to Android very, very dang quickly, okay? That's what happens. Now, it brings me back to a great example. My iPad 2, that brought me so much value. That was my first Apple device. I paid, I don't know, $300 or $400 for that or something. I mean, my gosh, that was the iPad I used for all my stock research back in the day, right? It was worth way more than $300 or $400, which, by the way, I think that was the last device Steve Jobs ever showed off. It brought me way more value than I spent on it, but so hasn't every device. Like, it should bring you more value than what you pay for it, right? That's a good deal. That's a successful business model, right? Now, overall and lasting impression of the conference call. I always walk away with like lasting impressions from a conference call overall after I hear everything in the hour-long talk, right? There's two things I left with after this conference call. One's very bad, one's very good, okay? And then we'll get into the stock price. The first thing is there's nothing to be excited about with Tesla for the next 6 to 12 months. I mean, absolutely nothing. Cybertruck's coming, but it doesn't sound like it's going to be coming. It doesn't sound like it's going to ramp nearly as fast as a lot of us were hoping for. It also doesn't sound like it's going to be margin accretive really anytime soon. It sounds like it's going to, if anything, drag on Tesla's margins in the short term. And so there's just not a lot to be excited about. Mexico gigafactory's up in the air. He wants to still do it, but it doesn't sound like anytime soon. So if you're hoping for any type of cost savings out of the Mexico gigafactory, that's not happening anytime soon. So just to be quite frank, there's not a lot to be excited about. They're facing insane competition on the price front, obviously in China. So interest rates are super high. There's just nothing to be excited about for Tesla for the next 6, 12 months. That's what I walked away with from that conference call. Now, I already had that view kind of before, but then I walked away from the conference call and heard Elon talk for an hour and the executives, and that was even more ingrained into me, okay? On the flip side, for the long term, everything's intact. Every freaking thing is intact. Everything is so set up perfectly for Tesla over this next 5 to 10 years. It's ridiculous, okay? Absolutely ridiculous. And so that's where you get into the short-term versus long-term game of Tesla, where it's just seems like there's nothing to be excited about this next 6, 12 months, but there's so much to be excited about over this next 5+ years. I can tell you that much, okay? Next up here, okay? Let me answer 3 questions. 1, what is my price prediction for Tesla stock overall? Where do I think the stock price is going? Okay, you might not like my answer to that, or you might, depending upon if you're a buyer or seller. Second thing is, what am I going to do with the current shares I have? I have $400,000 worth of shares. What am I doing? 3, am I going to hedge any more in regards to Tesla? Okay, first question, price prediction. I'll be honest, I think we're going under 200. I would say probably about an 85% probability. If I had to put, odds on it, and this is Vegas, I live in Vegas, if we put odds on everything, right? I'd say about an 85% probability in the short term, Tesla goes under 200. That does not mean Tesla's going under 200 tomorrow. That would be insane. But I would say about 85% chance Tesla goes under 200 in the short term. I actually think there's about a 50-50 Tesla's going under 150, okay? 50-50 that Tesla goes under 150 in the next several months here. Okay, not over the next several years, but over the next several months. So that's kind of what I'm thinking price-wise. There's nothing that can save us in the short term. There's nothing. There's a Cybertruck event that should be at the very end of November. It's not going to save us, man. There's nothing that can save us in the short term, really, in this situation, okay? Now, will I continue to hold my shares? Absolutely. Absolutely. I'll continue to hold my shares I have as everything's set up so beautifully for the long term. Last question is, will they be hedging more with Tesla? And the answer to that is probably not. I got my one hedge with Tesla. I feel comfortable with that. I don't want to go too crazy with my hedge in regards to Tesla, right? Because the story could certainly be different 6 months from now, 9 months from now, a year from now, right? Depending upon many various factors. So I'm good with the hedge I got. I'll likely flip that for a huge profit and potentially buy more Tesla shares with that money, or potentially buy other hedges for myself, to protect myself against 2024. So that's kind of what I'm thinking there. Appreciate everybody joining me as always. Thank you so much for being here, folks. I hope you enjoyed today's video. Make sure you subscribe to the channel. Also, thank you everybody that joining me over on Twitch. Man, that was a crazy live stream. We got another crazy one tomorrow, folks. Much love as always. Thank you for being subscribed. If you're looking to join my private group and apply for that, check out the pinned comment down there, and have a great day.